top of the morning to you from this part of the world, and depending on whichever time zone you're tuning in from, good afternoon and good evening to you. I'm very excited as always to welcome you to our first edition on the Forex Morning Mastery, where we shall be choosing a particular set of financial instruments that we will be monitoring throughout the course of the week. And today being the first trading day of the week, it's a very important day, as market participants will be strategically preparing themselves ahead of economic events, which will eventually assist in making informed trading decisions. And another thing that is more peculiar with today is the fact that it is the second to the last trading day of the month. And of course, while market participants prepare for the week, they will also likely be rounding off their trading activities for the month of April. So we are going to be looking at the current market structure from both technical and fundamental perspective, using our basic tools such as the economic calendar, trend lines, key levels, and chart patterns to unravel the potential trajectory for price action today. And in preparation for this week, I have three financial assets which we will be looking at, and this includes the USOILSPOT, the GBPUSD, and of course the XAUUSD. Now, I shared a video during the weekend, that is the XAUUSD, which is one of the assets we are looking at, but I did not do any public presentation on the GBPUSD and the USOILSPOT due to the limited time I had during the weekend. So today we are going to be doing a top-down analysis on the USOILSPOT and of course the GBPUSD with the utmost intent of identifying potential trading opportunities. Now, for those of you who are joining us for the first time, you're highly welcome on board, and I'm very excited to have you around with us this morning. Now, I know you may be wondering what this is all about. What is it that we really do here on the Forex Morning Mastery? Now, I share videos during the weekend which details what my plans are ahead of the new week. Now, during the Forex Morning Mastery, we come here to, as technical traders, to review and do follow-ups on this asset while we prepare for both the London and New York session. And the Forex Morning Mastery happens 3 times in a week. That is on Monday, Wednesday, and Friday. Now, during all of this time, we come here to review this market, and my aim here is to help you make informed trading decisions independently. So we go through the market, analyze the technicalities of the structure, and use it to understand how market participants are thinking, and then position ourselves for the next move. So once again, I welcome you on board and encourage you to actively engage in the comment section. So with that being said, here we shall be diving right into the business, and as usual, the first asset we normally look at is going to be the first thing we normally do is to keep tabs with the fundamental factors that will be influencing the sentiment in the market today. And based on the assets we are looking at, we will be focusing on economic features from both the United States and the United Kingdom economic docket. And usually we focus on high impactful event, but when there are days where there are no high impactful event, we include mid-tier economic features. At least this will give us an insight into what will be guiding market participants' decisions. So for Monday, April 29, we do not have any high impactful event. In fact, when I included the mid-tier economic features, we still do not have any to look out for. However, before I close on the economic calendar and revert back to the charts using our technical skills to identify trading opportunities, I would like to emphasize that there are a bunch of high impactful events that we will be looking forward to this week, starting from Wednesday, May 1st. That's the beginning of the new month. From the Fed interest rate decisions to the FOMC press conference, where the Fed chair will be having a speech and answering questions from the media. And then we also have the non-farm payroll coming up later in the week, that is on Friday. And of course, the average hourly earnings and the ISM services PMI. Now, the reason why I am talking about this event is that they are significant, impactful events. And the anticipation of this event, which though is going to be coming up later in the week, has a way of influencing the way market participants will be thinking on Mondays, Tuesday, prior to the event happen, which will reflect on the chart as price action. Now, as technical traders, we are going to be taking all of this into consideration while we review the current market structure and of course see how we can capitalize on potential opportunities for this week. So with that being said here, let's dive right into the chart. So the first asset we are going to be taking on this morning is going to be the USOILSPOT. Now, on the USOILSPOT, we had a tremendously profitable week. That last week was in fact profitable as we capitalized on that bullish momentum that started above our $81 level, which happened to be our key level during the previous week. We joined the momentum all the way into the $84 area before that bearish momentum began on Friday. Now, as we prepare for this week, what is going to be our plans? How do we intend to navigate this current market structure? Well, if we look at the, let's look at things from the fundamental aspect, that is the major activities behind the scenes that is driving the sentiment in this market. Now, this morning, while we open the market, we can see that we have a little bit of a bearish gap, which in fact gives us an insight into the character of institutional trading during the course of the weekend, giving us an insight into what may likely happen this week. Now, this bearish gap we saw here follows reduced concerns regarding an escalation in the Israel-Iran conflict. Additionally, apprehensions about heightened interest rates in the US has a high chance of influencing, impacting fuel demand. And one thing I would also like to emphasize here is if you remember last week, we had the core PCE, which is considered to be an inflationary data, which came in higher than expected, giving us an insight to how sticky inflation is in the United States. And we know that the Federal Reserve had employed the increasing interest rate to curtail inflationary pressure. And the idea of interest rate cuts for this year has been pushed aside due to the inflationary pressure in the United States and of course the resilient US economy. Now, this idea of higher interest rate has a tendency of increasing demand for the US dollar. Now, when the demand for the US dollar increases, prices for US dollar, the value of US dollar will rise, which will now make it the US oil commodity expensive for other currency pairs to buy. And if this happens, it will definitely affect the demand for oil. Now, another thing we will also take into consideration: over the weekend, Ukraine launched attack on additional Russian oil refineries, and this action follows Russia's earlier announcement of export and production cuts, coupled with ongoing tensions in the Middle East. Now, these factors sustain supply risk, serving to mitigate significant declines in crude oil prices. So market attention will turn to tomorrow's official PMI print from China, the world's top oil importer, for potential market movement development. Now, the reason why majority will be looking at the PMI data from China is considering the fact that China is the highest importer of oil, and if the economy is doing well, definitely it will rub off on the demand for oil. So this is another factor that may support the ascent of oil prices. Now, subsequently, focus will also shift to the FOMC policy meeting. It's a 2-day session. We have starting tomorrow and it will culminate on Wednesday, alongside with crucial US macroeconomic data, including the NFP report, average hourly earnings, and ISM services PMI, which I shared with you earlier, scheduled at the onset of the new month. Now, despite these factors, the fundamental landscape is adopting aggressive directional position at this point. Now, given the absence of any economic data today, let's look at things from an holistic standpoint. And to do this, we will start from the daily time frame. Now, on the daily time frame, what I did on the daily time frame was to take into consideration the character of price action since the beginning of this year, 2024. And if you look at this closely, you'll see that the year, throughout the course of the year so far, price of oil has consistently and uniformly found higher highs and higher lows, giving us an ascending trend line to buttress the strength of the buyers in this particular market. Now, you know how we use our ascending trend lines in this community. As long as price action remains above the ascending trend line, we will continue to look out for patterns and structures that support the idea of buying, and the only condition that will make us sell is for price to drop and break down this ascending trend line. Now, if we look at what has been happening in this market, throughout last week, we saw selling pressure come in, though it wasn't strong enough to break through the ascending trend line. So for me, the path of least resistance is still looking very bullish at this point in time. Now, in addition to that ascending trend line is our key level for this week, which has played a significant role in determining the did a little bit of choppy market conditions, which was peculiar last week before price action stays afloat of our key level. Now, we have two major factors here on the chart that will be guiding our trading decisions for this week, and that is the key level at the $83 area and of course the ascending trend line. So you would agree with me that we are at a crucial juncture at this point in time. We are depending on how market participant reacts to the structure at the beginning of this week will determine what our next line of action will be. So the question as we head into both the London and New York session, or even this week in general, is are we going to see a situation where both the 83 and the ascending trend line will be broken to incite a sell-off, or how are we going to see price maintain itself above the ascending trend line and the key level to maintain the uptrend bias? Now, we shall be scaling down into the lower time frame, our execution time frame, that is the 1 hour time frame, to look out for patterns and structures which will give us an insight into how market participants are reacting to that $83 area. Now, when we scale down into the 1 hour time frame, we begin to see things more clearly. As you will see, since the beginning of this week, our price action has done a range bound, formed a range bound structure. As you will see, price action for the first 1, 2, 3, 4, 5, 6, 7, 8 hours of this new week, we have seen a situation where price is confined within the $83 area. Remember, that's our key level for this week, and the $82.70 level to emphasize the prevailing uncertainty in this particular market. And you know how we treat our range bound structure. Of course, when price falls within a range and maintains within that area, we exercise patience and wait for either a breakdown of the support line of that range to give us an opportunity to sell, or the breakout of the resistant line of that range to give us an opportunity to buy. Now, looking at the way things are happening, I already placed my buy stop order above the $83 area, and it appears price action has triggered my first buy position for the week. Now, for those who capitalize on this opportunity, for those who had used and adopted our analytical approach to take advantage of this opportunity, well done and kudos to you. However, if you had missed out on this opportunity, well, I would encourage you to exercise patience. The market could still come back to retest the structure in an attempt to continue the uptrend move. So let's exercise patience if you had missed out on that opportunity and wait for price to come back, retest that area to incite an uptrend move. So at this point in time, we maintain a bullish bias. Price is sitting above the ascending trend line and of course sitting above the key level, all of which is looking bullish for us as at this morning. So let's see how far this bullish momentum will go today. And of course, I will be giving you updates on both my TradingView and Telegram platform of new levels that we can use to maximize the uptrend move. However, in as much as we are looking out for buying opportunities in this market, we should not ignore the potentials that sellers could actually come in at any point in time. And if they do, what are the conditions, what are the criteria that will give us a confirmation that truly sellers are coming here to stay? Well, first of all, the ascending trend line needs to be breached and broken to the downside, most importantly. And secondly, I want to see price break through the support line at the $82.70 level to incite a selling opportunity. So what this simply means is that we are not going to be selling unless the $82.70 level is broken and retested. So this is what we are going to be using to guide our trading decisions for today. So I encourage us all to mark out these levels on our chart, as we will be needing them as a reference point to guide our decisions for today. So our center of focus today is basically between the $83 area and the $82.70 level. If you have any questions whatsoever as regards to my illustration, or you need some further clarifications, feel free to let me know in the comment section. So as always, I will be taking the next 10-15 seconds off. Let's see if there are any questions before we move on to the next asset on our watch list. Stay tuned in and use that time to mark out these levels on your chart. Hello, Kofi. Good morning to you, Kofi. Glad to have you around with us this morning. Trust you're doing very well and hope you had a great weekend. All right. Thank you for the support, guys. I saw your likes. Thank you very much. Let's make the like tally with the number of people on board, and thank you very much as you do. So in the absence of no further questions, I'm of the opinion that we are all on the same page. So with that being said, let's move on to the next asset on our watch list. I do hope you've marked out the levels on the US All Sport accordingly, and let's be hopeful about the turn of event as we continue to monitor price action. So moving on to the next asset on our watch list. So the next asset we are going to be looking at this morning is going to be the GBPUSD. And what a tremendously profitable week we had last week, as we took advantage of that uptrend move right from the beginning of last week. We rode the move all the way up, and we did capitalize on some significant amount of profit, and well done to everyone who took advantage of this opportunity and of course stayed faithful to our analytical approach. Now this week is another week, and in fact we are also rounding off the month of April, as we are just a couple of days into the new month. Now, from all ramifications here on the chart, the GBP USD appears to have started the week on a bullish note, with investors keenly eyeing the upcoming Federal Open Market Committee, which is coming up tomorrow and Wednesday. So we are going to be receiving announcements on Wednesday, and of course the interest rate decision, and finally the press conference, which is slated for Wednesday as well. Now, these are major impactful events that everyone in the market will be looking forward to guide the current market dynamics. Now, due to the anticipation of this high impactful event, we may likely see extended sideways trading activities, as major key players in the market may want to step aside, waiting for this data to come in before making any informed decisions. So in that regard, we need to take all of this into consideration as well. Now, for the interest rates, the U.S. Federal Reserve's decision is expected to maintain the current interest rate within the 5.25 and 5.5%, which it has been holding on for over a year now. And this is supported by a robust U.S. economy and noticeable uptick in inflation, which was indicated from the U.S. core PCE we saw last week Friday, coming in at 2.8% higher than the market expectations. Now, there is this expectation, there is this sentiment in the market right now that there will be an extension of interest rates, maybe until September, maybe September at least, before we can start considering any rate cut at this point. And throughout the course of the last 2 weeks, Fed policymakers have emphasized a conscious approach, citing inflation's persistence above the targeted 2% threshold. Now, the higher for longer stance, in fact, has come to stay at this point and may continue to bolster the US dollar's position. So we may likely be on the verge of it thinning out in the bullish momentum we have been enjoying on the GBPUSD since last week. So we need to take considerable approach, a sensitive approach to taking advantage of opportunities on the GBPUSD. Now, on the other side of the pond, that is from the United Kingdom, market speculation leans towards the Bank of England implementing interest rate cuts during its upcoming June meeting. Now, this follows the Bank of England's governor recent remark expressing openness to the prospect of 2 or 3 rate cuts this year, which has signaled a potential dove shift in the policy of the United Kingdom. Now, such sentiment could weaken the pound sterling and pose challenge for the GBPUSD pair in the nearest future. So we are going to be looking at the market structure from an holistic standpoint to see how the market participants are going to be digesting these various factors coming in from both economies. Now, to do this, let's scale up into the higher time frame. I think this was where I started my analysis for this week on the GBPUSD, after taking into consideration the character of price action in the last couple of months. And this was what I was able to come up with here. The first one here, you will see that in the last 2 months, the market has been gradually and slowly finding lower lows and lower highs, which has resulted into this descending channel you will be seeing on your screen right now. And if we connect the series of lower highs, you will see we have the resistance line of that descending channel. And when we connect the series of lower lows, we have the support line of that descending channel. Now, with the way things are going right now, the path of least resistance is looking bearish, considering what I just said. I talked about the Bank of England Governor Andrew Bailey's looking at interest rate cuts, and if there's going to be an interest rate cut, then this will devalue the pound sterling and favor the US dollar, which is looking at keeping interest rate higher for an extended period of time. Now, in addition to the structural pattern we have here is our key level, which is situated at the 1.25350 area. Now, look at how this key level here had played a significant role in determining the direction of price action whenever price comes into that price level. In fact, it has been, if we go to as far back as a year, it has been a significant level, but I don't want to focus on the past as we are projecting into the future. Now, let's look at what has been happening since February for the sake of this session. Now, look at what happened here on the first week of February. We saw how this level was serving as a demand zone, as you will see, demand zone here mid-February, and then at the beginning of this month, it was serving as a demand zone for a while, though the momentum wasn't strong enough, as you will see a couple of weeks after, price did break down that key level. And during the course of last week, towards the end of last week trading session, we've seen price action come back into that key level, which is closer to the resistance line of that descending channel. Now, you would agree with me that we are at a crucial point where the key level is sharing a beautiful confluence with the resistance line of that descending channel, which could help in inciting the downtrend continuation here if price finds it difficult to break through that resistance line of that descending channel. Now, with this idea in mind, I have a simple setup identified on the 4 hours time frame, which will be playing a major role in guiding our decisions for this week. Now, look at the structure here. I have a range bound which details the trading activity in the last 48 hours. So price has been confined within that key level at the 1.25350 and the 1.24750, while still sitting above this ascending trend line we have here. Now, you know how we use our key levels, our range bound structure in this community. When price falls into a range, we know that there is an indecision going on, hence we need to exercise patience and wait for price to either break out of the resistance line to give us an opportunity to buy, or break down the support line of that range, which interestingly shares a beautiful confluence with that ascending trend line to incite a sell-off in this particular market. So are we going to be buying or selling this week? I know that is the most important question right now. Well, if we look at things from a fundamental perspective, for me, the path of least resistance is looking bearish, considering the resilient US economy at this point and the fact that the Fed may likely be keeping interest rate higher for an extended period of time, and comparing this with the idea that the Bank of England are beginning to consider cutting interest rate following the decline in inflation on in their economy. Now, scaling down into the 1 hour time frame, we want to see how market participants have started reacting to this current structure as they anticipate the major events coming up this week. Now, scaling down into the 1 hour time frame, we begin to see things more clearly. Now, right here on the 1 hour time frame, I already have a range bound structure here identified. As you will see, the week started at around the 1.24800 area, and in fact it started on a very strong bullish note. And as soon as price got into that area between our key level and the 1.25480, we begin to notice selling pressure resume around that area. Now we have a structure here where price is currently confined within the 1.25480 and the 1.24800 area. Now for me, I would like to see price action give us a signal in the form of either a breakout of the resistance line for this week at the 1.2548 to start considering buying. In fact, I would love to see some confirmations to join that uptrend move, or price action breaking down both the 1.24800 level and that ascending trend line we identified on the 4 hours time frame. So this is what we are going to be doing to guide our trading decisions for today. So let's see how the market is going to play out, and if possible, we can join this bearish move even before the breakdown of both the ascending trend line and the 1.248 if we can see a series of lower lows and lower highs on our lower time frame to maximize the bearish move. But in the meantime, we have a sell stop order below the structure right here, just right below that the ascending trend line, to join a bearish move. But if we do see series of lower lows and lower highs on the 50 minutes time frame, maybe in the next couple of hours, I will definitely give us updates on both my TradingView and Telegram platform. So for me, like I said earlier, the path of least resistance is looking bearish, but let's wait for structures to mature before jumping in. But if the contrary happens and price breaks out of the resistance line of that range, then we had no other choice than to join the uptrend move. So let's see how the market will play out. This is my simple view on the GBPUSD for today's trading session. I encourage us all to mark out these levels accordingly on our chart, as we are going to be using them to guide our independent trading decisions. So if you have any questions whatsoever as regards to my explanation, or you need some further clarifications, feel free to let me know in the comment section. So I will be taking the next 10-15 seconds off. Let's see if there are any questions whatsoever. And if you have found this content helpful and useful in making your independent trading decisions, I would really appreciate your support. Give the video a thumbs up. This is the cheapest way you can support this community to grow, and thank you very much as you do so. So I will be seeing you on the other side of 15 seconds, and before we move on to the final asset on our watch list. Stay tuned in. All right, I see you, Soldier Pete. Good morning to you. Glad to have you around with us. Trust you're doing very well. All right. In the absence of no questions, I want to assume at this juncture that we are all on the same page here. So can we move on to the next and final asset on our watch list today? All right, so the final asset we are going to be looking at this morning is my favorite amongst them all, and that is the XAUUSD, popularly known as the gold spot. And what an interesting situation we have here this morning as the market is beginning to make some sense after breaking down some significant structures. Now let me quickly state here that I wouldn't be doing a top-down analysis on the XAUUSD, as I already did that in my weekend video on this asset. Now if you in any way have missed out watching on that video, I encourage you to go ahead and watch that video, as you would have a background knowledge of how we got to the point you're seeing on this chart right now. You're going to have an idea on how we are able to identify that key level, and of course the patterns we did identified to guide our decisions for this week. The links to the XAUUSD video is right in the description box of this current video you are watching. Now let's go back into the chart. Now from a fundamental perspective, I did give a breakdown of this on my Telegram and TradingView platform. If you are part of this community on the Telegram and TradingView, you must have gotten an idea into what we are looking at this morning. Though the new week started with a strong bearish note, as we saw price started the week around the $2,336 level, and in fact it dropped significantly, did a sharp retest of the 2,320 before it started another rebound back into where it started the week. Now before we go further on this one, for those of you who saw my video on the XAUUSD this weekend, I did talk about the emergence of this important downtrend continuation pattern in the form of what is looking like a pennant, sorry, a flag pattern, let me put it that way. If you look at this impulsive move all the way down, then the whole consolidation phase here transitioned into what seems to be a flag pattern. And from a technical and theoretical standpoint, whenever we identify this kind of pattern on the chart, it more or less tells us that price may likely continue the downtrend move. And remember last week, the bearish momentum began last week, as we saw, and look at what happened this morning. We saw price action break down the support line of that flag pattern, and it appears to coming back to do a retest of that structure, which could be the beginning of a downtrend continuation. However, it is important for us to note that it is not all the time that the market follows through with theoretical expectations, and we need to always keep our options as open as possible to make sure that we don't get caught up in any idea that is not what the market will be doing. Now, during the Asian session, we saw some supply, of course, which appears to have been taken out right now. And if we consider the thinned day in Japan, the dollar may likely gain some traction today. And in fact, we've been seeing some signs. The US Treasury bond yields has been doing very well in recent times, and you know how the US Treasury bond yield is directly proportional in value to the US dollar. If the Treasury bond yield is doing very well, it rubs off on the US dollar, and if the Treasury bond is not doing well, it also rubs off on the US dollar. Now, the release of the US core PCE data on Friday has, of course, reinforced expectation that the Federal Reserve will maintain higher interest rate for an extended period of time. Now, this anticipation is prompting capital flows away from non-yielding assets like gold, silver, coppers, and the like, and a positive sentiment surrounding the equity market is going to be adding to potential downward pressure on the price of gold. However, please, I'll also like to emphasize that the current market outlook is still looking bullish. So the bearish tone that we are talking about here may come in and may not. and even if it comes in, it might be limited in such a way that it could be a signs of profit-taking activities ahead of the US macroeconomic data coming up later this week before price continues to the upward, to the upside. Now, other factors that could limit a downtrend of gold is the geopolitical tension in the Middle East, of course, which has shown no sign of de-escalation. During the course of the weekend, we saw Israel open another war front in Gaza, which further escalate tensions in that particular area. So these may be driving factors for gold assets as it may. Now, over the last 9 hours, we have seen price action go through a range bound structure at this point. As you will see, like I did say earlier, the market has started the week around the $2,336.50 level, and then culminated at the 2,320 before it began that uptrend move again. Now, at this point, I already have a buy position triggered after price has broken out of this $2,336.50 level. For those of you who are with me on both my TradingView and Telegram platform who saw my updates this morning, you must have taken advantage of this move. And while we do so, please let's ensure that we have enough breathing space for price action to move around. And what I simply mean by that is having a wider stop loss. So a minimum of 100 to 150 pips depending on the size of your portfolio will do just fine, as we want to allow price action to run its course before the next additional positions will be included. Now, as it is right now, let's hope that this bullish momentum will continue. But like I said, we have a breakdown of the support line of this range here. We may still see a situation where price will drop to the downside. So we are just trying to follow the tide of the sentiment in the market. Now, if this bullish move continues in such a way that it breaks out our key level at the 2,350, then we shall be looking at more opportunities to buy the XAUUSD. However, if price climbs into this area, please be mindful that we are still within this downtrend continuation pattern here. In fact, the bearish momentum could start from here. We never can tell. If we see any form of reversal setup there, like a double top structure, head and shoulder pattern, rising wedge, whichever case it may be, a breakdown retest of the neckline could incite the downtrend move. So while we are taking advantage of a buy position, we should not ignore the potentials that sellers could come in at any point in time. However, if it gets to a point we get taken out of this buy position and price continues to drop to the downside, well, a breakdown of the 2,320 will be a good opportunity for us to join a sell. So I do have a sell stop order sitting below the 2,320 at least in the meantime. Let's see how far this will go, and if possible, we could see price selling opportunities even before the breakdown of the 2,330. That is, if we start seeing strong bearish momentum like series of lower lows and lower highs on our lower time frame, we could be in for an opportunity before the breakdown of the 2,320. But if any of such happens, of course, I will be giving us updates on both my TradingView and Telegram platform as at when due. So this is my simple view on the XAUUSD. So we already have a buy position triggered. Please take note that we could get taken out of this buy position. It's still the beginning of the week, and we still have enough time to recoup any loss we make along the line. So at this point, we have a buy position triggered, and of course, we are looking out for more opportunities to buy if price action breaks out of the 2,350 level. So this is my simple view here, and I encourage you to stay tuned on my TradingView and Telegram platform for updates on this particular asset. Now, the XAUUSD live window will be coming up later today again, 5 to 10 minutes into the New York session. So for those who do not know, the XAUUSD platform is an avenue where we come together to monitor real-time price action on the XAUUSD, especially during the New York session. So it starts about 5 to 10 minutes into the New York session, and lasts for about 5 to 7 hours depending on the volume of trading activity. And please, I will also want to emphasize here that due to the anticipation of the US macroeconomic data later in the week, we may likely see choppy market conditions as a result of major key players in the market stepping aside, less liquidity in the market, and then waiting for the news to happen before making any aggressive bets. So we may likely see choppy market conditions. We may likely see extended sideways trading activities in this whole structure. Let's keep that in mind. So if price moves significantly in our favor, let's ensure we move our stop losses immediately, secure some profit, as we could see price drop back into our entry point. So this is my simple view on the XAUUSD for today. If you have any questions whatsoever, feel free to let me know in the comment section. Trust me, I'm here and willing to be of help in that regard. And if you have found this content helpful, please give the video a thumbs up. Your likes are very valuable to me. So far we have over 10 people on board and we have 6 likes. Those of you who like the video, thank you very much for your support. I really appreciate. Much love from my hand here. However, if you are yet to click on the like button, why not? That's the cheapest way you can actually support this community to grow. And thank you very much as you do so. So let's see if we have any questions whatsoever before we start rounding off on today's Forex Morning Mastery. All right. So in the absence of no questions, I think we have come to the end of today's Forex Morning Mastery. It has been a wonderful session with you guys. I really appreciate your support, your comments. Kofi, Soldier Pete, I just saw you now. Adeni Abalola, good morning to you. Glad to have you around with us this morning. Trust you're doing very well. How there? All right, so with that being said, we were able to take on all of the 3 financial instruments on our watch list for this week, which includes the USOILSPOT, the GBPUSD, and of course my favorite asset, the XAUUSD. And we were able to identify simple trading setups using our basic tools such as trend lines, key levels, and chart patterns to strategically position ourselves ahead of the next move. And I do hope you all marked out these levels accordingly on your chart. If you have done so, well done and kudos to you. So let's see and wait patiently to allow the structures to mature. And always remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So with this understanding in mind, you do want to be having a well-defined risk management strategy. So please, very, very important. Now, for those of you who are joining us for the first time, I do hope you are able to gain 1 or 2 things from what we discussed here today. And if you did, you want to be part of our subsequent editions, trust me, the more time you spend with us in this community, the better you get to understand how our analytical approach works, which eventually helps you in making your own independent trading decisions. So I look forward to seeing more of you same time on Wednesday, 9:05 a.m. UTC, 9:05 a.m. West African time, 8:05 a.m. UTC, as we come here again to review how well these assets have been doing and of course prepare ourselves for an important day which doubles to be the first trading day of the new month, and of course the outcome of the FOMC minutes, the Fed interest rate decision. And of course, we also want to be listening to the Fed chairman on that same Wednesday, which obviously will be bringing some volatility in the market. And we do not want to miss out on that opportunity that day will present to us. So I look forward to seeing you same time on that day. So mark it out on your calendars right now so you do not miss out on that session. So it's on this note, I would like to wish us all the best of luck today. All right, I see you at Dani Abalola. No problem. I look forward to hearing from you. All right, so with that being said, I wish you best of luck today. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.